Weaker inflation data lifts risk assets, but crypto gets faded after Powell and the Fed dots signal higher rates for longer. Ethereum initially bounces on optimism of an early July ETF launch date, but prices can't hold, and we retest the recent lows. Options markets see some hedging activity, and calls get sold in good size, taking short-dated call skew to zero. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. And before we get started with today's episode, we've got some exciting news to share with you today. We are giving away this awesome sweater to one lucky viewer. Entering the competition is easy. All you got to do is like the video, subscribe to the channel, and leave a comment below telling us why you love this podcast. And don't forget to use the hashtag Deribit giveaway in the comments to be eligible to win. We can't wait to hear from you, and we'll announce the winner in our next episode, so stay tuned. Now let's get on with the episode. I've got my man Dave here from FRNT as always, and we've got a special guest flown in from Zug, Dennis Ehlert from AMINA Bank, derivatives trader over there. How's it going?
Thanks for having me.
No, pleasure. Tell us all about AMINA Bank. What do you guys do over there?
So AMINA is about 5 years old now. We are a FINMA licensed bank with a heavy focus on crypto. We offer our clients who are like professional investors, high net worth individuals, institutions, whatsoever. We offer them access to crypto in a seamless and regulated framework, basically a safe environment, so to say. So clients can come from TradFi basically and diversify into crypto, or they are diehard crypto natives who want to diversify out of crypto. So we offer basically a bridge between the traditional finance and the crypto world. Clients can have an e-banking tool. They can have access to loans. Trading obviously is a big part of the bank, spot trading in cryptocurrencies, but also access to equities, bonds, funds on the traditional side. Then the option trading business where I come into place. So we offer our clients access to OTC liquidity in crypto options where they can trade yield strategies, leverage their exposure, or trade the volatility, whatever they prefer, basically. We have products where a client can invest directly in via NISIN, and staking services, etc. So a one-stop solution, basically, for crypto and traditional assets.
Cool. And how about yourself? Like, what's your background in trading?
So I started in around 2012, 13, classic account management with a lean to fixed income business. And I was managing UCITS funds, multi-asset strategies with quantitative overlays and equities and interest rate futures for about 7.5 years. And then I moved into the crypto business in 2021, joined back then SEBA, which is now known as AMINA Bank, and I joined the trading desk there, the option trading desk, and
What got you into crypto? How did that part?
Well, I guess, I mean, I first got in contact with around in 2017, I think it was, where many I talked to is like the time where they dipped their toes into
I wish I got in that early.
Yeah.
I got in like 3 years later than that, unfortunately.
And I was just excited about the new upcoming topic. So I didn't really have much of a clue about it, like what it is. There was not so much news, obviously, also not so much input as we have nowadays. But I got curious and I wanted to learn more about it. And then at one point I just decided I go all in, basically. I quit my job in TradFi and moved to crypto.
It's funny, isn't it? When you make that transition, it's such a different feeling to being in it feels like TradFi, certainly the banking world in Europe anyway. I think the US is still fairly buoyant, but my experience of being in European banking was we're in a secularly declining business, right? and just everyone's mood and spirits were just like always going on a downtrend, right? Whereas when you get into anything related to crypto, it's completely the opposite. Everyone's in a growth mindset. It's all about the future of finance, and it just feels so different to be in that.
It feels different. It's funny, we were talking earlier before we came on about, you know, our sort of respective backgrounds and work with a lot of macro guys and hedge funds and being in that space. And I was saying about how they're always bearish, like, you know, and it's quite depressing at times, just that, because that's where the money's made, right? The sort of big vol events were on the downside, and you made your money there, and kind of, so it's almost like a willing the market to collapse.
Yeah, because that's the only time it's not boring.
Yeah, exactly. And make money. What I love about crypto myself as well is that, as someone who has this big picture macro view about this almost like unsustainable fiat system that can only be sustained through this perpetual, you know, currency debasement angle, but actually the translation is not like a collapse, it's
an explosion. Yeah.
We can actually be quite happy, and we can actually enjoy that process playing out, and actually be quite sort of balled up and stuff.
Well, yes and no, right? That only works if enough people are into crypto and have realized that they need to be into crypto, because otherwise you've got this really small subset of people who are making loads of money in crypto because they've got it, and everyone else just gets screwed with the fiat debasement. So what you want is like enough of the populace to understand and embrace it and realize that you've kind of got to have some, right? Yeah,
and it's like it's the more I look at, you know, and it's funny, like you know, you got like the gold bugs, and I'm like, you know, your thesis is completely right. You've just got the wrong asset. You just picked the wrong asset. And then like a lot of the bearish arguments as well, like become, well, then Bitcoin's the hedge. Yeah, don't be short stocks. Like that's not going to work at all. Because currency debasement in dollar terms, they'll go up. But you know, you think this system is unsustainable. We can't keep running these deficits and all that stuff. Then Bitcoin's your ultimate hedge. But,
so Dennis,
we digress.
We're massively digressing, but it's fun and it's all good fun.
Yeah.
But do you think we're still early in this cycle of adoption for crypto? Like from where you stand, do you still think there's just a massive amount of growth still to come in terms of people investing real money, real capital into this space?
Yeah, overall, I think we're still in the earlier stages. I mean, we just started with the ETFs this year. So this is like a good starting point where I can see like this is where financial or institutional adoption starts picking up, and we are far away from reaching like a top where we see now all the big banks are offering the crypto products. We're far away from that yet, and still conversations, when you have conversations with big financial institutions in general, like insurance companies, pension funds, all like where the money is, or where the
large critical mass of capital is.
They have been so far in general, like when we started talking to them a couple of years ago, very resistant when it comes to crypto, you know, because there was not much knowledge about it. Regulation wasn't clear outside of Switzerland, I would say, and this is slowly changing. But I think the ETFs definitely help, not just because there's a product now which is easily investable. It's just because the media is just much more talking about it now on the news, and not only bad, you know, because there was also like a couple of years ago when you heard about crypto, it was mostly somehow related to like these terror financing and rather with a bad touch to it, and that has changed. So I think. Yeah,
I think I first heard about it in 2011, and I thought it was a money laundering vehicle, right? So I stayed away from it. It was trading less than 1,000 back then, right? So I felt like a right idiot.
Well done.
Yeah, I know, exactly.
Where are you guys located? So obviously Switzerland's headquarters.
Yeah, so our headquarters is in Zug, in the Crypto Valley, as they call it, in Switzerland. We have several other offices with dedicated licenses. We have Hong Kong office, AMINA Hong Kong with a license. We have an office in Abu Dhabi with a license. And we have representatives in the UK as well.
Yeah, so the AMINA twins, right? So
exactly.
The notorious AMINA twins.
Chris and Alex, the AMINA twins.
Who are basically representing AMINA Bank, or like on behalf of AMINA Bank, And yeah, the trading, the custody, the main business for us, for me, for myself, the focus is happening in Zug, in the headquarters.
Mm-hmm.
And but yeah, also the reason why we expanded into other locations is because demand is not just picking up in small Switzerland or in Europe. The demand, especially from Asian and the Middle East, is increasing, and seeing also that the jurisdictions are coming up with licenses where you can actually get a license now for offering crypto services is like just telling me, okay, this is the right way to go, and this is like a positive.
And it's really funny, like you're seeing it in the US with the massive adoption of crypto. It starts to become a political thing, because it's like I've got this large subset of my populace that are crypto friendly and that want to see good, favorable regulation and policy with regards to crypto. So that encourages the politicians who want to get voted in to be more crypto friendly. So you're starting to see this virtuous cycle around that. So I can see that happening in other jurisdictions as well.
Yeah, right? It's still amazing to me, you know, given how far we've come. I mean, you talk about are we early or not, and institutional adoption. You know, you've got AMINA Bank, one of few banks, like very crypto friendly and focused sort of banks around in sort of Europe. Even like FR&T Financial building that investment bank platform and service into crypto, like this just doesn't exist. Like, and it's, you know, when you think of the traditional banking world, that's like so overbroked, you know, and yet the kind of services that you take for granted, like, just don't really exist in the space, or not in, you know, there's not lots of people doing it. So like, you know, there's AMINA Bank and there's a couple of others that would stand out, and that's kind of it.
And as Dennis said, with the regulatory clarity coming through, that encourages more people who are kind of on the sidelines to suddenly now offer those services and embrace that space.
Yeah. So I mean, we've spoken about, that's why I think what's gone on in the last few weeks in the US in terms of it becoming now like a partisan issue and political, and that change. Once everyone's open to it and there's less career risk around it, like I just think, you know, there's got to be a flood of banks coming into the space and trying to play catch up with the AMINAs, trying to play catch up with the FR&Ts. Because right now I was just gone, no, we're not touching it.
But Dave, this is also bullish. Why is the price going down?
Yeah, should we get to that?
We probably should.
What's going on?
We probably should.
Yeah, do you know what? It's like last week for me was, in terms of the macro, like, was such a super bullish backdrop in terms of, so we had the disinflationary, like the softer CPI prints, which was backed up by a softer PPI print.
And we got a knee-jerk higher to 70k on that.
Yes, we got a nice knee-jerk higher, kind of off to the races, and then the Fed came out, and I don't actually think they were overly hawkish, but the dot plots, they kind of marked to market, right? So they went from back in March when they...
Well, I think the dots were pricing in a little bit more than one cut, right? And then they said, actually, it's only one cut in dots.
Yeah,
right?
but that's like taking a median of the dots, right?
Yeah.
There's a lot of nuance around that. So that's just a median. And even Powell kind of played that down a little bit.
When he said that non-farms might be overstated.
Well, yeah. So I mean, we spoke about that. The non-farm headline definitely overstated what's underlying weakness. Then last week, and we started to see jobless claims creep up. So yeah, what looked like a really good kind of rally into the Fed then came in and killed it with this kind of knee-jerk, like, hawkish reaction, at least from the market. And then kind of the end of the week, we got this weak jobless claims print. And I think a theme now that the market's starting to play is that this higher for longer from the Fed is now starting to be seen as a policy mistake, and another Fed policy mistake. Now, I kind of feel like that feeds like what I call like the long duration play, i.e. bonds should start to really perform like long duration bonds, 10-year, 30-year. So yields come lower. That typically benefits the duration proxies, i.e. like tech, NASDAQ and Bitcoin. But obviously we're seeing NASDAQ hit record highs, and Bitcoin's not
bulletproof.
playing ball. No.
Bulletproof.
The other thing as well that I think should be bullish Bitcoin, and it hasn't played out over the last week, is we're seeing some sovereign stress in Europe. Obviously, Macron's called early elections in France in response to this move to the kind of far right across Europe in elections there. And again, like for me, Bitcoin is like the ultimate hedge against, you know, the kind of current political and economic structures kind of looking fragile. So all this together, you got this disinflationary trend coming back in the US. You got a pricing maybe a mistake from the Fed in terms of, you know, staying too high for too long. Plus you've got political instability across Europe. I thought we'd be sat here now with Bitcoin at like 75k and pushing on, and we're not. So
what do we put it down to?
So there's a few things. I mean, maybe we like the trend's just exhausted from. I mean, we have to remember we're up still 60% year to date.
True.
I still think, and I get a lot of pushback on this, but I still think China's playing quite a big role in this. So the currency,
keeping a lid on it.
Yeah, the currency's back under pressure. And in fact, I was watching today, we keep like dollar CNH, she's like was I think 727.5 and just above. And it feels like they're sat on that. China are sat on that. They don't want to let the currency go. Bank of Japan, but disappointed last week. They didn't taper their bond purchases. So the yen's back under pressure. And obviously Japan is the biggest export competitor for China. So they're watching, you know, dollar yen go up. So they're trying to, it's kind of, they need to almost keep pace with yen, but not let the currency go. So the whole time that China are sat on dollar CNH, obviously they're worried about, they're trying to disincentivize capital flowing out. So I'm convinced that China are sat on Bitcoin because they want to keep this veil of currency stability. So I kind of feel that needs to resolve itself, either with a broad dollar sell-off, in which case that relieves the pressure.
So it sounds like what you're saying is dollar yen lower makes it easier for Bitcoin to rally, basically.
Yeah, and dollar CNH.
Yeah, but I'd say because dollar yen lower means CNH probably comes lower. And then that you're saying Bitcoin can go because China don't need to keep as much of a lid on it, basically. Sounds like a hybrid trade. Do you guys offer hybrids at AMINA Bank where I can have a Bitcoin call contingent on dollar yen lower?
No, we're not into that.
Okay, never mind. Maybe that's the next generation of products in like 10 years.
Yeah, so it's like the price action looks awful, I've got to say, in Bitcoin at the moment.
What about ETH though?
And ETH as well.
ETH was like, it looks like we're getting a 2nd of July launch date according to the Bloomberg guys, and ETH's like little knee jerk gets sold, and now it's testing 3,300, 3,350.
Exactly.
Looks a bit ropey down here.
So it's just, the price action's bad, but it's just not. It's not explained by the macro backdrop. So yields are coming lower.
This is what we call a divergence, people.
Yeah.
When you're seeing the right news flow, but you're seeing bad price action. Now, should that make you want to buy the dip, or is the bad price action actually a sign that, okay, the macro is not the thing that's driving things right now, so there needs to be a flush out of positioning? Because I don't think we've hit panic yet, right? If you look at volatility levels, for example, it's not like they've spiked, right? So I would argue right now this divergence says to me, stay out the way.
Yeah.
When we get a break, if we get a break of like 65, which we're kind of breaking as we speak on 65K on Bitcoin, 3,300 on ETH, if we get a flush lower from those levels and vol spike 10, 20 points, then that's your flush out where you step in and buy probably.
I think that's the thing, like we've had a couple of like mini flushes. I mean, I don't actually think there's a lot of leverage like in Bitcoin at the moment. So I kind of feel, you know, is there a lot to actually sort of flush out? It does feel to me, just again, just pure experience, you know, in trading, it just feels like it needs that last capitulation that we haven't maybe had yet. What
do you think's got more upside, Bitcoin or Ethereum?
So at the moment, if I just look at the narratives, there's obviously the ETF Ethereum narrative that is hanging in there. We just got the news last week. I think that the probability of the go-to date has been moved to July now, which is kind of positive. Market didn't really react much to that.
Not much, no.
Surprisingly.
But I'm hearing that's because people are thinking, because they won't be able to get a staking yield out of it. So if you buy the Ethereum ETF, there's no staking yield. So why would I do that when I can just park it and stake it and get a yield for it? So does that mean the inflows are going to fall massively short on expectations? That's what I'm hearing. But what do we think on that argument?
So
go.
No, I think the staking yield, and if you just look at the annualized the APYs in Ethereum over the last years, I don't think the staking rewards
That's not what they're in it for.
Matter too much. I mean, it's nice to have, but in the end, it doesn't really matter over long term.
Yeah, because if you're getting 50 to 100% return on capital, who cares about 5% staking yield, right?
Yeah, like crypto is a capital play, it's not a yield play.
Right? And also the ETFs, right? Can't you park them in a tax efficient wrapper? So the kicker you're getting on not paying tax on your gains if you own it via an ETF is way more than the staking yield, no?
Yeah. Well, yeah, there is that. The other thing I'd say, again, it's even same with the Bitcoin ETFs. Like, if you're buying via the ETF, it probably means that you can't buy through like crypto native exchanges and what have you.
Which means you're not staking anyway.
Yeah, like the whole thing we got excited about the ETFs was the fact that it was opening up to an investor base that previously were unable to access it. So I kind of feel that, you know, if you want to buy ETH and stake it, buy ETH and stake it. Like if you know, the reason why the ETFs would be popular is because, you know, that investor base that can't access it through native exchanges, what have you. So I don't think it's gonna. I think it'll be part of a portfolio of investors that want to have access to the potential capital appreciation of crypto.
Yeah, I agree.
And not I want to get the additional yield, because if they wanted to do it, they could be doing that anyway. Yeah. So they're only going to buy the ETF if you.
Yeah. No, I hear you. Which is why it is a little bit scratch your head, confusing on the price action on ETH. Like, I do think there's value in, you know, trade that I've had on ETH with short put spreads to June. I've rolled them down and out to July. So I think it's much more likely that we get the bounce by July, because the ETF gets confirmed in early July and they expire at the end of July. So whilst you might get a window of weakness into the end of June for the next 10 days or so, you're likely to come out the other side of that flush out and probably end up higher once they launch and we see like however many billion inflows come in, right?
Yeah. So, it's funny though, like overall, I still just think like we've been in a bit of a range trade for a while now. Which actually, again, if you think of it from the move we've had, we're up like 60% year to date, called it, off like 10% off from the highs in Bitcoin. Like, it's all pretty sensible. And actually, this kind of consolidation, I think, bodes well for gains. But crypto, we all get spoiled. And if it's not just going up 10% every day, everyone's like, oh, this must be the end. And it's not. But it was only a few weeks ago, if you remember, like we were testing sub 60K, and everyone's going, oh, we're going 50K. Now we're back testing 65. And I think the concerning thing for me is that I think the backdrop from a macro point of view, from a political point of view, is so constructive, and yet we haven't made new highs. Yeah,
but some of that might be because, you know, there was a bit of meme fever. Like Solana went a bit crazy. That's been getting hit pretty hard. Solana's down like 10% in short order, right? So some of these unlocks of all these tokens have not done well, right? They've just like hit the market, and the whole alt space getting trashed. So it might actually be some of that contagion kind of hitting the big caps, right? And just kind of keeping a bit of lid on crypto. Once that's kind of out the way, then the big caps can do what they need to do, essentially, right?
And we were talking as well about like the ETFs. I mean, one of the things that's quite clear now is that the inflows, which still on the whole are still being huge, but some of that's probably exaggerated by the fact that it's actually playing these basis trades.
The futures against ETFs.
Yeah. So it's probably difficult to completely gauge what the actual pure kind of demand.
Is that a trade that you see people doing?
No, I mean that's what I see on the market basically. But it's a topic that came up just more and more recently, like the influence of the basis on the spot market and the correlation between the ETF flows and the futures open interest. And it's kind of interesting, because if you look closer, you see that there must be some sort of correlation, and you read more and more about that. These leveraged funds are opening massive short positions in CME futures. And at the same time, you see some hundreds of millions in inflows in the ETF. So obviously, we don't know if it's coming from that, but it makes sense, sort of these market neutral strategies are a nice play for these funds.
Yeah, and it makes sense why the Bitcoin spot price isn't exploding whilst you're seeing those inflows, because there's an offsetting short futures trade that's coming with it, right?
Yeah. And then also from the demand supply dynamic is like a lot of OGs and whales are still selling into this, because again we're still
long-term holders.
Yeah, so they're kind of selling out. So maybe there is a bit of a negative flow dynamic, and it's just all part of this consolidation until we kind of take the next leg higher. But again, I think my point is within a macro framework and how I look at the world, like we're unfolding perfectly.
Yeah,
we've seen.
Yeah, so if anything, that is making you more bullish, not less bullish.
Yeah, but like you have to respect price action, right?
Yeah,
and this is where as well, like you get on Deribit and you get your downside hedges on.
You don't over-lever yourself.
You don't over-lever yourself. Yeah. You need a bit of patience, but G7 central bank and easing cycle started. We've had Bank of Canada go, obviously ECB go. The Fed looked set to go at some point this year, and in fact, the way the data's playing out, they're going to go, sooner rather than later. I would say, but then say political turmoil. It's all just feeding like perfectly in for us to take the next leg higher. So I just think it's patience. It's clearly breaking that 72, 75k level is just gonna take a little bit of momentum.
Told you, when that break, close your eyes and buy calls.
So Imran, because we were talking about how to play it, and do you just start positioning for the top side? But actually, the view that you've probably got time to get in as a break, and you buy the break rather than trying to keep just sort of bleeding sort of theta by trying to position too early for it.
Yeah.
No, I agree. I mean, there's still so Mt. Gox is also like a topic that's still pending. Got a little bit lost in the news lately. But there's still an amount of Bitcoin coming into the market, a lot of supply. I mean, we don't know how much is going to be coming in, but that can have, maybe that's some people, some are worried about that, adding to the downside pressure on Bitcoin a little bit. And then, these long-term holders who had their goals to get out of the market finally at maybe 70k, 75k. This is a barrier that the market needs to break into.
But this view, this potential overhang from long-term holders, from Mt. Gox selling, makes me want to do that call switch trade, right? Where you own September or December calls on Ethereum and you sell September or December calls on Bitcoin. And because it just feels like Ethereum needs to have its little wake-up call and its pop above 4,000 once the ETF launches, and yet Bitcoin's still got this overhang. And you're paying a little bit of vol premium for that spread. Do you track that spread much yourself?
I mean, I look at it, definitely, yeah.
Were you a buyer of it at 5 in the long end?
I'm not commenting on that.
Oh, you can. I was just testing,
But it's interesting that spread is quite significant at the moment, given that ETH is not really doing much on the spot side.
It's higher than the realized. I mean, the realized comes and goes, right? So actually, if you look at 10-day realized, ETH's in like near 50, Bitcoin's mid 30. So it's actually 15 vol realizing better. But I hear you, we're actually not going very far. We're just chopping around, right? So if you're not trading that gamma, you're not actually monetizing that ETH vol premium. But realistically, I just think if you zoom out and say, where's ETH going to be by September when we've had 3 months worth of inflows into the ETF? They're either coming or they're not. If they come, I can't see ETH being down here, right? So, and whereas Bitcoin could still be a little bit struggling to rally because of these headwinds, basically, right?
I mean, at the same time, when the Bitcoin price performance was mainly based on anticipation of the ETF, or after the actual ETF launch, price performance was subdued, I would say, at best. So there's also a risk for ETH at even a higher rate that ETH is not going to perform as we want to see it perform. Because there is the ETF.
But it's underperformed Bitcoin by so much already, right?
Yeah, that's also true.
Yeah.
But we still haven't had a proper alt season yet. But actually, when you think of halving and all this stuff, we're still kind of on track for all of this stuff playing out. And I say it's just like price is narrative always in markets generally, and particularly in crypto. And that's why I kind of, and as someone who takes a bigger picture view, it's just kind of, guys, like everything's playing out just fine.
Just be
like,
patient.
Just be patient.
Yeah.
It's all there. Like, and yeah, like get your hedges on, because we know what the downside looks like in crypto. I still at this point, and bearing in mind, as we've come in here, we were breaking like 65k on the downside. So
but we might be at 62.
And I'm always aware, yeah, you could have a flash down to 58k and it'd be like, you know, how did that happen? But I still just don't see anything that suggests that there's a deeper correction here. I don't think there's the leverage or positioning in it to warrant that right now. Never say never, but I do think the fundamentals are lining up for us to still push on and take out that top side. And so I think it's be patient, have your hedges on, and look for opportunities to position if you can, if it's cheap enough to position for the top side, and hodl.
Yep. Well, I think that's a good place to end it. Dennis, it's been a pleasure having you in the studio. Thanks for coming all this way to see us. And guys, don't forget, hashtag Deribit giveaway if you want one of these beauties. Make sure you
modeled
comment,
so beautifully.
Like, comment, and subscribe. And we'll see you all next week. Cheers.